I think it's really exciting to see Bitcoin here at 75,000. The fact that we've been able to hold these levels is really appealing. There is this question of whether we're in a channel or whether we can break out to the upside. If we can break out to the upside at a time that funding rates are so negative, I think that's an extraordinarily positive story, and there's probably upside volatility for us. I also have an eye on the rumors about the Clarity Act. There's certainly a lot of chatter about that. I think if we can line up passage of the Clarity Act, pretty strong price performance, improvement on the quantum side, I think it's going to be a pretty exciting Q2. Maybe the spring will arrive early.
Since hitting its $126,000 all-time high in October 2025, the crypto market hasn't delivered the kind of euphoric breakout many were expecting. Instead, 2026 has opened with volatility, stalling momentum, and leaving altcoins especially struggling to find direction this cycle. But beneath that uncertainty, something important is starting to shift. Geopolitical tensions across the globe, particularly in the Middle East, have begun to reshape market dynamics, and rather than dragging crypto lower, they've actually provided a layer of support. Bitcoin is now holding firmly above $75,000, trading in a tight range between roughly $73,000 and $75,500, with markets responding to signs of easing conflict and potential diplomatic progress. That stability might seem subtle, but in a historically volatile asset, it's a signal traders are paying very close attention to. Matt Hougan believes things are about to get even more interesting for Bitcoin and the overall cryptocurrency landscape in the coming days and weeks. As the chief investment officer at Bitwise, Hougan isn't just looking at short-term price action, he's analyzing the bigger picture. From institutional flows to global monetary shifts, his outlook suggests that if Bitcoin can maintain and break above these levels, the next move may not just be another rally, but the beginning of a much larger, more sustained expansion, one that could push prices significantly higher in the coming months, and potentially toward the $1 million mark over the next decade. In this video, we're breaking down insights from Matt Hougan, who believes this isn't just a temporary bounce. We'll also look at what needs to happen next for Bitcoin to break out of this range, why the $75,000 to $76,000 level is so critical, and how his long-term $1 million Bitcoin thesis could realistically play out over the next decade. If you want clear data-driven breakdowns like this, make sure to like the video, subscribe to the channel, and turn on post notifications so you don't miss what comes next. Before we get into today's breakdown, quick question. If you're holding crypto right now, what is it actually doing for you? Most people are stuck in the same loop. Buy, hold, wait. Your capital just sits there while the market moves around it. FortisX changes that. It's a staking and on-chain analytics platform that lets you put idle assets to work, earning yield through staking and liquidity strategies, with rewards distributed every 24 hours. No lockups. Withdraw anytime. And unlike most platforms out there, FortisX has been operating since 2018. In crypto, that kind of longevity means something. So if you're holding anyway, should your assets just sit there, or should they compound? Link is in the description. Start with at least $100, and there's a 1% bonus waiting for all savvy viewers. Thanks, and let's get back to the video.
I think it's extraordinarily bullish for the long-term trajectory of Bitcoin that it's performed so well during this conflict. I've always thought of Bitcoin as two things. It's a store of value like gold, and then it has effectively an out-of-the-money call option on becoming a tool for international commerce, a way for countries to settle transactions using an apolitical rail. But it's been an out-of-the-money call option because for most of Bitcoin's history, that just seemed really unlikely until the Russia-Ukraine war started. We were in a dollar-only world. Since then, it's been basically dollar yuan. That's been the settlement rails. But what we saw in Iran is a country sort of point towards Bitcoin as a potential solution. Now, there are all sorts of reasons to be concerned about that, from sanctions and money laundering. There are things for us to focus on. But what it shows is that the increasingly fractious world and the increasing changes to the global monetary order have opened up a space for Bitcoin. And if Bitcoin could be both a store of value and a actual currency, then the price targets we've been talking about, and at Bitwise, we've been talking about, $1.3 million by 2035. I think you have to ratchet that up, maybe another $1 million increment, because that's a huge addressable market. I think it's directly the reason we've been rallying through this Iran conflict, and it makes me very optimistic long term for where Bitcoin's headed. In a normal status quo, there is no opportunity for Bitcoin to break into this exclusive club of the dollar and the yuan being the settlement rails. But when you get these shock moments, like the Canadian truckers strike, like this challenging geopolitical event that exists between the US and China, right? Literally in the middle from a geographic perspective. That's what opens things up. My piece was called, Chaos is a Ladder, because you need those events to make space for Bitcoin to sort of wedge its way into the conversation. So I just thought that was a really great example you raised.
In this chaotic world, do things get worse for folks to really understand the value of Bitcoin?
Well, look, I'm not sure that they get worse. You need these shock events to open the door, but then once you normalize the asset, it can find more normal use cases. I come from the ETF industry, as you know. Really, bond ETFs were not that popular until the global financial crisis, when bond mutual funds stopped working because there was no underlying liquidity. But bond ETFs really did work, and the market sort of shifted towards that. We're actually seeing something similar with Hyperliquid and real world assets, where the fact that the Iran war conflict started on a Saturday when the CME was closed forced people to consider Hyperliquid. But once you open the door through those shock events, you can get more normalized use. So look, I actually think an apolitical currency is extraordinarily good for the world. Does it raise issues that we need to deal with? Absolutely. But I think it's good for the world. So once you open the door, I think it's natural to spread it in. It's just hard to get that first step through. I think this is an example of us getting that breakthrough. So no, the world doesn't have to get terrible for Bitcoin to succeed. Quite the contrary. I think Bitcoin will make the world a better place long term, but we do need these shock events to open the window for us to get a seat at the table. Yeah, I mean, what we talked about in our long-term capital market assumptions is that all you need to get to $1 million Bitcoin is for the store of value market to continue to grow the way it's been growing for the last 20 years. That market has grown at a 12% CAGR for the last 20 years. If that continues for the next 10 years and Bitcoin ends up with like 15, 17% of the market, it's at 6% today, you're talking about $1 million Bitcoin. So you don't need much to get there over a 10-year period. In terms of what could accelerate that time frame, things like what happened recently, where Bitcoin as a currency finds space in the world, could significantly accelerate that. Progress on the regulatory front, if we do get good news on the Clarity Act, that would significantly accelerate that. But I don't think that much has to happen in order for us to get to that $1 million price target within 10 years. Again, just the market continues to need to go in the direction it's been going for the last 10 years. If you extrapolate that trend, I think we'll get there.
What Hougan is describing here is a major shift in how Bitcoin is perceived, and more importantly, how it behaves. In the past, geopolitical instability would typically trigger risk-off sentiment across markets. But now, Bitcoin is doing something different. It's holding steady, even as global tensions rise, and in some cases, benefiting from that uncertainty. That's a big deal, because if Bitcoin can function not just as a store of value, but also as a neutral settlement layer in a world that's becoming increasingly fragmented, its long-term upside expands dramatically. And importantly, Hougan makes it clear, you don't need the world to fall apart for Bitcoin to succeed. These shock events simply open the door. Once Bitcoin proves its utility in those moments, adoption can continue under normal conditions. Now, bring that back to where we are today. Bitcoin is sitting just below a critical breakout zone. Funding rates are leaning negative, sentiment remains cautious, and yet price continues to hold. If that $75,000 range turns into support and we push higher, it could confirm exactly the kind of structural strength Hougan is talking about. But Bitcoin isn't the only piece of this puzzle. Because while Bitcoin is establishing itself at the macro level, the rest of the crypto market is still fighting to define its future, and that's what Hougan talks about next.
Look, the L1 space is extraordinarily crowded. What we do at Bitwise is we scan the horizon to see which projects have really differentiated architectures that are finding meaningful traction. Certainly Ethereum is one of those. We have an Ethereum ETF, ETHW. Solana is one of those. We're very proud of BSOL, the largest Solana ETF. Avalanche is interesting because it offers customizable L1s for enterprises. I think that's a very differentiated L1 architecture. So we're very excited to bring Bava to market and give people sort of a choice among the most interesting designs in the L1 space. Yeah, look, the reality of the L1 space is the thing that I'm confident in personally is that demand for L1 high quality block space will grow, right? The growth of stablecoins and tokenization, I think, are fait accompli, moving to trillions of dollars in market cap. The things that we don't know is which L1 structure will win, right? Will it be the fully decentralized Ethereum structure, the more centralized Solana structure, or this Avalanche with new L1s, Avalanche L1s, they're called now post subnet branding? We don't know. So the bear case is that maybe this more customizable structure doesn't win in the market. It's been doing really well, right? Real world assets on Avalanche are up 950% in the last year. So it's been doing really well. But any honest appraisal says we're still at the early stage in the growth of L1s. And so knowing which architecture will win is hard. From my personal perspective, that means I own all of them, but different people will make different bets. And it's entirely possible that a different architecture will win. I just think Avalanche's approach resonates with mainstream firms moving into the blockchain space and the introduction of real world assets. So I think it has a real shot, but it doesn't have a guarantee that it will win.
Hearing that and hearing about the institutional interest in hype, like, are you surprised to hear that? What are you hearing on your end? And what do you anticipate for products like hype ETFs when they come to market?
Yeah, absolutely. Vis-a-vis Hyperliquid itself, I don't think it's that they want to. I think it's that they have to be able to trade. You can't be a global macro hedge fund or a leading investor and not be able to respond to geopolitical events on Saturday. And right now, Hyperliquid is basically the only game in town. So they're being forced to onboard into this ecosystem. Look, I think Hyperliquid is part of a new generation of DeFi projects that are built after the regulatory environment improved, that allow for real value capture, that have rethought how the token economics work. And it's having massive success. I can't speak to our Hyperliquid filing beyond the fact that we have filed for a project because we're in sort of the SEC's quiet period on that. But I will say, look, Hyperliquid is obviously one of the best performing crypto assets over the last whatever time period you want to look. It's got an incredible founder. It's found product market fit. It has good tokenomics. I think there's a reason a lot of people are excited about it.
All right, Matt. And the last thing I'm going to ask you as we head into the weekend, what are you watching? What are you keeping a close eye on?
Look, I think it's really exciting to see Bitcoin here at 75,000. The fact that we've been able to hold these levels is really appealing. There is this question of whether we're in a channel or whether we can break out to the upside. If we can break out to the upside at a time that funding rates are so negative, I think that's an extraordinarily positive story. And there's probably upside volatility for us. So I'm just sort of watching and waiting and looking at prices just like everyone else. Of course, I also have an eye on the rumors about the Clarity Act. There's certainly a lot of chatter about that. I think if we can line up passage of the Clarity Act, pretty strong price performance, improvement on the quantum side, I think it's going to be a pretty exciting Q2. Maybe the spring will arrive early.
Sounds like you are bullish on the Clarity Act passing before midterms.
I'm hopeful. I'm not bullish on anything in Washington, and everything can break, but the most recent spat of rumors has been more positive than I expected. So
while the long-term outlook remains strong, the short-term picture is far more complex, and the data shows the market is at a critical turning point. On-chain metrics from CryptoQuant reveal that Bitcoin is now approaching a major resistance level around $76,800, what's known as the short-term holder's realized price. Historically, this is where rallies tend to stall, as traders who bought near these levels look to exit at break-even. And the behavior of large holders, whales, is reinforcing that risk. Exchange inflows have surged to around 11,000 Bitcoin per hour, the highest levels seen in months. At the same time, the average deposit size has jumped significantly, confirming that these movements are being driven by large players, not retail investors. In fact, whales have accumulated over 270,000 Bitcoin in the past month alone, one of the most aggressive accumulation phases in years. But now, as price pushes into resistance, some of that same capital appears to be rotating, positioning for potential distribution. This creates a very tight setup. On one side, you have strong institutional demand, ETF, inflows, and shrinking exchange reserves, tightening supply. On the other hand, you have large holders actively selling into strength, building pressure right below a key breakout level. In simple terms, the market is coiled. If Bitcoin can break above this $75,000 to $76,000 range and sustain it, it would signal that demand is strong enough to absorb supply. And that's the kind of move that could validate Hougan's broader thesis, not just of higher prices in Q2, but of a long-term path toward $1 million Bitcoin. But if it fails here, we could see another short-term pullback before the next leg higher. Either way, what's happening right now matters. Because this isn't just another rally attempt, it's a test of whether Bitcoin is ready to transition into its next phase of growth. If you want to stay ahead of moves like this and understand where the market is really heading, make sure to like the video, subscribe to the channel, and turn on post notifications. Because as Matt Hougan outlined, this isn't just about short-term price action. From Bitcoin's growing role in global finance to the realistic path toward a $1 million valuation over the next decade, the biggest opportunities in this market are still ahead, and the only way to catch them is to stay informed before the breakout happens. Thanks for watching, and see you in our next video.